In today's video, I'm going to go over the dividend tracker that I use, the one that I recommend that everyone at least try out one time. I believe that there are a lot of other finance YouTubers out there using Simply Safe Dividends. That is the dividend tracker that we'll be talking about today. So this is going to be an all-encompassing review of it. I've been using it for over a month now, and I'm going to be telling you guys exactly what I like about it, what I don't like about it, if it's going to be right for you or if it's not going to be right for you. So let's get into it. What's up, guys? Welcome back to the channel. My name is Bruce Wang. If you guys are brand new to the channel, which I know a lot of you guys are, I do a lot of dividend investing, real estate investing content on my channel, and I've been getting this question a lot, especially in the last few videos. What is the app or what is the website that I'm using for my dividends? So basically, I have a bunch of different portfolios. I can show you here. I'm using M1 Finance, I'm using Robinhood, I'm using Vanguard, and I've been testing out the Cash app as well. So I have a bunch of money just all over the place, and I just wanted one website that I could check everything all at one time without going to a bunch of different websites. And that is exactly why I'm using Simply Safe Dividends. My portfolio right now is worth over $40,000. I'm slowly growing this over every single week, just reinvesting my dividends and aggressively funding the portfolio. So subscribe to the channel if you guys are interested in that. So if you guys have been watching my channel and following me along this journey, you guys probably have a bunch of different brokerages as well. So with Simply Safe, I get to input all of my data, and it spits out all of this crucial information that everybody should know about their portfolio. Before this, I was basically guessing how much I was making every single month. I was, just checking all the statements at the end of every single month that Robinhood gives out, that M1 gives out, and I was just calculating it that way. But now I'm able to tell exactly how much money I'm making to the dollar amount. So Simply Safe Dividends has a income tracker, I guess you can call it. And my projected annual income is going to be about $1,400 for this year. So every single week, I'm buying more shares of stocks. Like this week, I bought more ExxonMobil and SPHD. So I would update this portfolio, and this would just change automatically. So with the monthly breakdown of my entire portfolio, for this month, I should be seeing around over $100 worth of dividend income. Next month is going to be the highest that I've seen ever, $180 total. All of these are the stocks that I own here. We can scroll down. It'll tell you exactly how much these stocks are paying. I have a decent amount of monthly paying dividend stocks. So you can see that AJNC is one of the stocks that are going to be paying me out every single month, and that totals up to $96 at the end of the year. I can also arrange this by the highest dividend paying stock that I own to the lowest, and obviously one of the highest is going to be SPHD. This is the biggest position in one of my Robinhood portfolios, 80 shares, and I'm going to be seeing around $12 every single month from this monthly paying dividend stock. I'm pretty sure this is very self-explanatory. You can see exactly what stocks are paying you what to the exact dollar amounts and on the month. So moving on to the portfolio, one cool thing that I want to show you guys is that if you guys want to add your own stocks in here, all you have to do is just make a for me, I have to make a fake portfolio here, create account, and it's as easy as entering your holdings or import a spreadsheet. So the one thing that I could not figure out how to do was import a spreadsheet, because I haven't made a spreadsheet for all of my stocks. I already told you exactly how I was searching for them or figuring out the data for them. And I don't think that Robinhood or M1 Finance gives you a spreadsheet to import. I was looking for that, but I couldn't find anything. So I did this the old-fashioned way, just by data entry, typing in the symbol here, exactly how many shares that I have, and exactly how much money that I paid for those each and every single share on average. After doing this for all the stocks, I would just update the portfolio, and it's just as easy as that. So now I'm going to delete this because I don't want to mess up what I have going on here right now. And you can even create play portfolios. I kind of don't like the word play portfolios, but if you ever wanted to create your own high yield portfolio, or just test out some of the stocks that are out there that you don't really have that much information on and you just want to learn more from it. So without trying to bore you too much, if you guys wanted to test out a few portfolios for yourself, you guys can do it here. Going into the next data set here, balance and performance. This part of the website is not that complicated. Everything is very self-explanatory here. Moving into the valuation, this is probably the second or third of my favorite part of this website. And right here, valuation as of today, dividend yield is 3.5%. This is a relatively safe dividend yield. Anything 4% or lower is relatively safe. Yield on cost, this is 3.83. What I want to do is get this as high as possible. And the only way to do that is I need all of the dividends in my portfolio, all of these different stocks. I need these companies to pay me more dividends on the amount that I've already paid on my cost basis. On top of that, Simply Safe gives you a timeliness when to invest new cash. We look for holdings whose dividend yields are in line with or above their historical averages, whose dividends appear safe. That's the whole gimmick with Simply Safe dividends, is right in the name. So some of the stocks that I might want to take a look at because they're potentially undervalued. You can see it says here, may be undervalued. In general, everyone has to speak very carefully about what they're investing in. I will never tell you guys that you should invest in any certain stocks. I only tell you guys what I'm investing in and why I see that it's undervalued, potentially undervalued. I always have to be very careful with my words because, there's a lot of people out there that don't know how to gauge their risk tolerance, and a lot of people lose money that way. So even with Simply Safe here, they say may be undervalued. So if you guys invest in these stocks and they lose money, they don't want to be responsible for it. So one of the stocks that I've been investing in lately over the past 2-3 weeks now, ExxonMobil, may be undervalued. Exxon dividend yield is 53% above this 5-year average, and their dividend safety score is very safe, 70%. And if you want to dive even deeper into any of these stocks here, Simply Safe gives you a lot of research when it comes to the stocks that they update. And they don't really update them as often that I would like. This one is like about 2 weeks old. I wish they could do it every single week at least. So I don't want to really bore you with all of this research. You guys can come here, figure out what stocks that you guys want to buy, do research on them. All right, let's go into the next tab here. Dividend safety of my entire portfolio. 13% may be unsafe. 17% borderline, 37% is likely safe. So I kind of wonder what all of your portfolios are like when it comes to dividends. I don't know if you guys are investing strictly in dividends or growth stocks, but to me, it seems like a lot of the people that come into my channel are coming from, penny stock trading and day trading. And if you guys don't want to actively do that anymore, dividend investing is probably the best way to go here. So the name is in the title, Simply Safe Dividends. It'll go over everything in your portfolio here and tell you exactly the safety score. And if we take a look all the way at the bottom here, 33% of my income is unrated, and that is because eBay, I don't know why they never did any research on eBay, but all of these are all ETFs. And one thing that Simply Safe doesn't do is rate ETFs. So for all the people that can't predict the future and are just starting their investment journey, start by looking at index funds or ETFs that have all of these stocks in the S&P 500 in them. Those are the two easiest ways to get into the stock market and start learning about different stocks. All right, so we are almost done here. Dividend growth. This is something that when I first started investing in dividend stocks that I did not think too much about. Dividend growth is actually very important when it comes to your portfolio, because there are a lot of stocks that pay dividends with a high dividend yield or a yield that kind of just stagnates or is inconsistent. And there are some companies that have, and then there are dividend aristocrats or dividend kings where these companies are paying a dividend, and every single year they're slowly growing their dividend income. So that's where I kind of want to move towards now, because dividend growth is very important over the long term. That will really add up, especially on your portfolio. All that compound growth is insane. So this is exactly what I'm talking about. AGNC and PSEC. These are two of my most volatile stocks, or unsafe stocks. And if we take a look at the dividend growth here, it's very slow. 5-year dividend growth obviously is a negative, so there's almost no growth here, but the dividend yield is very high. And on the other side of the spectrum, we can see Sherwin-Williams Company, a very safe dividend score, and over the last year, a 31% growth in their dividend income, 15% over the last 5 years, 12% over the last 20 years. So now let's take a look at diversification. In this tab here, we can see all of our sectors: real estate, communication. This is very similar to my M1 Finance portfolio. Financials, information technology, and so on and so on. Here is the breakdown of all of the income. 10% is coming from SPHD. 9% is coming from VOO. If one of these sectors gets out of hand or gets bigger than I want it to, then I can obviously adjust it when the time comes. But right now, everything is looking pretty good. When it comes to the sectors here, I am very heavily invested in the real estate sector, and that is something that I should bring down a bit. One thing about me is that I'm kind of really biased towards the real estate sector because, that's my day job. I have property management company. I'm investing in real estate properties as well. I have 2 duplexes, and I'm on the hunt for the next deal. And so that's why I'm kind of a lot more biased towards the real estate sectors. But the smart thing for me to do is actually not invest in anything real estate related, just because outside of the stock market, I'm so heavily invested in real estate. So that's been my internal struggle lately, and hopefully I get that all sorted out before I go crazy. So those are the 6 fundamental portions of your portfolio. All the information you'll most likely find there. So now let's take a look at some of the other extracurricular activities they got going on here. On the homepage, you guys can see the latest research that they publish a few a week, but they don't update each stock every single week, if you know what I'm trying to say here. So in the timeline section, we can see all of the updated dividend income here. Some of these stocks has raised their dividend, some of them has lowered it, and this tells you exactly what's going on. I think this is going to be for the week or for the month. I'm not really sure. Chevron increased by 8.4. The energy sector has been getting hit, and I don't know if we've seen a bottom, but I am slowly accumulating as much shares of oil stocks as I can right now. So if we take a look at the screener, you can filter out all of these different stocks and create your perfect portfolio. Dividend safety, you can get very safe. Make sure none of these companies are going to be cutting dividends, or you can do the complete opposite and go very unsafe and see what happens. If any of you guys are doing that, let me know your results. I would love to see what's going on with your portfolio if you did this. So in the ideas list, you can obviously find different stocks that you might want to add to your portfolio. Some of the stocks that I talk a lot about are going to be from the monthly payers here. Apple Hospitality REITs, I've owned them for a while. LTC Properties, Borderline Safety, 52 score. Main Street Capital, 62 on the safety score. Realty Income, this is my all-time favorite right here, 86, but it could be overvalued. Potentially, you might want to take profits on that. A lot of you guys always ask me about different stocks, and a lot of the times I don't even know any of the stocks that you're telling me about, because in my mind I only know like 50 different companies, and the ones that you're telling me, there's just thousands and thousands of stocks out there. I'm not going to know each and every single one, and there's not enough time in a day for me to give you my opinion on a certain stock. So as we take a look at the last section here, I want you guys to make sure you're doing your own research and you're not just listening to what somebody on YouTube is telling you to buy. You're not gonna hear me say you should buy this stock ever. And when you're doing your research, don't just look at the dividend yield and say, all right, this is a good dividend yield, I'm gonna be buying this stock. Make sure you look at everything and it fits your risk portfolio, risk tolerance. For example, if you're investing in cryptocurrency, your risk tolerance has to be very high if you want to be able to sleep at night. And for anybody that's doing dividend investing, I would say that risk tolerance, depending on what you're buying, is going to be moderate. And if you have a lower risk tolerance, you can invest in bonds, and that's like a really small example of the scale here. You should figure out where you're lying in between and go for that, because that's going to be, because you want to be able to sleep at night. And if you have a low risk tolerance and you're investing in cryptocurrency, you're going to have a bad time. So I like almost everything about this website except for the fact that it costs $400 for 1 year subscription. $400 for 1 year subscription. So luckily for us, we get a 14-day free trial. One thing I want to say also is that I'm not sponsored by Simply Safe. If you guys are watching this, make sure you contact me if you guys want a sponsor. I'll definitely recommend your website. So going back to the main topic, this is going to be for anybody that has a bigger portfolio. I would think maybe up to 100,000 plus. And if you're like sitting around that range, maybe this will be great for you. But if you're just starting out, I think the free trial is going to be more than enough just to, just get the ball rolling so you can learn exactly what you're doing. If you're just beginning, I'd rather see you invest $400 into your portfolio than investing it with Simply Safe. But if you have money to burn, and you're really aggressively trying to, grow this stock investment of yours, then Simply Safe is hands down one of the best dividend trackers out there that I recommend, even though this is probably the only one that I've tried out. If you want to watch more content from me, go check out these videos here. I just recently started a brand new channel, so if you haven't seen that yet, go subscribe to me over there as well. I also want you guys to follow me on Instagram. I post there pretty much daily. And don't forget to hit the like button, subscribe, hit the notification. I'll see you guys in the next one. Thank you. I love you 3000. Bye.